Hello again. Thanks for joining me. This is the US Futures weekly chart analysis for the week ending 26th of August 2022. The first chart, as always, is the US dollar index futures. And the quick bit of history on this. Some supply was drawn out on this bar here. In response, the market came back to challenge the sellers. You can see that the breakout line was here. This is where price broke out. The market was able to consolidate to some extent here, and in response it began pushing higher again, and it looked like it was all set just to blast past the previous highs here and move considerably higher. But this week spread has narrowed again. Volume was right on the average, and it looks like that some supply at least has been drawn out. In the bottom of the bar, below the previous bar's close, there was a test for supply, and prices moved higher in response. But spread has narrowed considerably, and price hasn't really moved above this bar's high where supply was drawn out previously. It looks like there really is still supply being drawn out at this level. Actually, what we should do is have a look inside that bar. We'll just flip back just quickly to the daily chart. Okay, this is the first bar of last week. You can see prices accelerated higher after the market consolidated back down here. So all was looking fine here, and this bar closes well off its high on a large increase in volume, the highest volume for quite some time. You can see prices made an attempt to move higher just there, and it's failed. The market's moved lower and then recovered back to mid-bar. So supply's being drawn out in that bar, almost no doubt, and it's at a similar level to where supply was drawn out previously. The next bar tried to move higher on low volume, which makes sense. Supply's been drawn out. There's going to be a lack of demand in the market. While people wait and see what's going to happen, the market will normally attempt to absorb that supply, and that's what's probably happened in the next bar. You've seen a test for supply, and supply was found to be low. The volume was low. But just to double check that, the market has then tested for supply a second time, even more deeply on the next bar. This is on Friday. Prices dipped much lower, below the lows of all the bars previously this week. It did draw out a little bit of supply, but it didn't look too bad, still below average, and that's allowed the market to recover and pop back up to close as a slight up bar for Friday. So overall, yes, supply has been drawn out and the market has again attempted to absorb the supply. It's dipped lower to threaten the sellers and has gone through the process of absorption in an attempt to remove the supply. So back to the weekly chart, and the answer is yes, supply has been drawn out this week once again at a similar level to where it was previously, but the market's made a pretty good attempt, I'd say, to absorb that supply. If it proves successful, you'll see the market accelerate higher next week, perhaps with a little test earlier in the week, and then if everything is found to be okay, then price moves higher in response. But if there's a test, say on Monday next week, and further supply is drawn out, you may find the process of absorption and secondary testing continues for a little bit further next week. So it'll just depend on how much supply is drawn out early next week as to whether price really does continue higher again now, or whether there's some more absorption and testing for supply prior to any further push higher. And if the supply is overwhelming, I imagine price will have to come back and challenge the sellers again back around the 105 level. I don't think at this stage it's quite to that sort of level, but we'll wait and see. Most likely price is going to continue higher, but there may be some further consolidation required if this supply is persistent and ongoing. Okay, next chart is the S&P 500 index futures. You can see price had been attempting to push back above this breakdown line. There was always going to be some supply being drawn out through here. Price accelerated into this zone on below average volume, which suggested at the time that selling pressure was low. That's after it's pushed higher. There had been some previous buying support come in down here, but supply's been drawn out through here by the looks. The market attempted to absorb and hold on last week, and it's rolled over and closed back below the breakdown line this week. Now, all being equal, supply should reduce again. Now it's back below the breakdown line. If supply is ongoing, you'll expect the market to push back further, possibly down to where previous support occurred at 3,800. But you would expect the selling pressure to reduce. Now price is back below the breakdown line. So we'll just see how it plays out. If the market does move up next week and fails to recover, that would be a sign that it is going to roll over and continue lower. But if the market tests for supply next week, more like this, it would be a sign that, especially if volume was lower when that occurred, back below average again, it would be a sign that supply is not chasing the market down, and there may be a secondary challenge to that line at some point in the future. So the market may have rolled over here, but we need some confirmation just to see. Next chart is the US Treasury 10-year note futures. The important level above is here in a zone. You can see prices moved up to it and failed previously. And to the downside, this 117.5 has popped up a few times. It's just through there, sort of like that, at 117.5. And you can see the market has attempted to hold on strongly at that level, because if it breaks down here, there is some fluff support through there. But if it breaks down here, it'll probably be significant for the market. Volume is very high due to contract rollover, so don't pay too much attention to the very high volume. It was lower than the previous three, so it was probably not really strong volume. It probably was not very strong selling pressure, and that's one of the reasons the market's been able to hold on at this 117.5 level. So the market's looking vulnerable, no doubt, but it's holding on at the lows of the current trading range. Next chart is copper price futures, which have done a pretty good job this week considering. The US dollar index was higher this week in the end, so that would have put pressure on this market, and for it to create a modest up bar was probably admirable. Now, this volume here is this bar here, and it's likely to be an issue of some sort, and you can see that it is. High volume bars in the background will usually contain some form of supply, and the market is finding it difficult to move back above that bar's low. The breakdown line is way up here, so you don't have to worry about that just now. But this bar is obviously holding some supply. It's held the market back here. It was a test for supply. There wasn't any real challenge on this bar. The market has attempted to challenge that line or that level on this bar. And look at the volume. It's very high, well above average. And on all that effort, price could really only absorb supply and not push above that line pretty much at all. It's a difficult level for it to overcome. It will do so if it's determined enough, but it's causing some issues, no doubt. And it may be that it's absorbed all the worst of the supply this week and it's able to move higher next week, depending on what the US dollar does as well. If the US dollar was to move lower next week, especially early next week, if it tests for supply, that'll allow this market to push higher, at least initially, and get itself back within the range of this bar more. It's trying to push higher. The effort was admirable this week, but there's supply being drawn out, no doubt, and that may cause the market to test again and continue absorbing supply at that 375 level further next week. Gold price futures. Gold price futures broke down at this level previously. It never really challenged this level when it moved up. There was good buying support come in the background here. Price moved up. It's drifted lower. This week it moved lower with a narrowing spread on below average volume. It floated lower, mostly on a lack of demand, but there's not much selling pressure in there either by the looks. It's just drifting lower, possibly just the inverse of the US dollar index this week. It doesn't look threatening towards the downside, but it doesn't look promising towards the upside either. This was a sideways bar marking time for sure. Silver price futures have two breakdowns in the background. Different to the gold price futures, there was very little buying support at the lows, but there was an attempt to buy the market back up after gold started accelerating higher. There was no serious attempt to challenge this breakdown line. Price drifted lower last week, and it appears that there's been some buying support come into this market this week. Spread narrowed considerably on above average volume. If that was all selling pressure, this market would have accelerated lower, but it didn't. It held a narrow spread on above average volume. There's some buying in that bar, and perhaps that's promising and maybe instructive for the future. Maybe the market can see there's an attempt going to be made to push higher and challenge this breakdown line. However, we'll read it as it comes. At this point, there's been an attempt to support the market, and we'll see what comes from it. Light crude price futures has been quite eventful lately. There appeared to be an attempt to support the market through here, which failed or appeared to fail on this bar. That's this volume down here. So it pushed lower and below the lows of this trading range that I'd marked in. But since then, the market is attempting to consolidate again. It doesn't want to go lower. It's had the opportunity to go lower for sure. It could have easily pushed lower and probably back down to these levels, but it's holding on. There's buying in the market. You see, this was a potential breakdown bar, but the next bar was up and it closed back at the old breakdown line. Here was a test for supply on reduced volume. Although it was average, there was still some supply being drawn out. The high close suggests that the market made a decent attempt to absorb that supply, and that's proven in the next bar with a test for supply at the lows of the bar, and it was able to push up and close as an up bar for the week on average volume. It was actually lower than the previous bar, and that's why it's pink. That said, it's closed higher, and that suggests that selling pressure has reduced in the market. So there's probably going to be an attempt to push this higher at some stage. Whether the market continues to consolidate sideways for a few more bars, we'll just have to wait and see how that plays out. But it's holding on strongly despite the strength in the US dollar. It's doing a good job. Aussie dollar currency futures, the important level 70 cents. It's made an attempt to hold on at 70 cents and it continues to fail. It's a difficult level to recover. After price has broken down below it, it's a difficult level to recover, both technically and fundamentally. You can see the market's pushed up to this level and failed. It's made a real acceleration into it when there was weakness in the US dollar, but immediately failed. It's pushed up this week to the level and it's drifted back lower and closed closer to its lows and down near the lows of last week's bar. It didn't break through the lows of last week's bar, which is probably a good thing at showing some strength, but the recovery to 70 cents was always going to be difficult, and it's proving to be so. There's some modest support around 68 cents, and you can see that's come in previously. The real serious support, if price breaks down, is closer to 65 cents. So we'll see how the market goes. If the US dollar continues higher, that will put this market under pressure and make it more difficult for this market to recover back above 70 cents, and will likely push it back towards the 65 cents, with some modest support being drawn out along the way around the 68. Last chart is Bitcoin futures, and Bitcoin futures have a couple of breakdowns in the background. There's current support at 20,000, which I expect lasts back to 16,000. That's where previous support appears to be, between 20,000 and 16,000. At the moment, the market is bouncing off the top of this previous support around the 20,000 level. There's been considerable buying and selling at this level. There's high volume on this bar, there's high volume on this bar, and there's high volume on this bar. We really need to see which way this market's going to break. There's some mixed signals in the market at the moment, and it's not clearly showing which way it wants to move. If all of this buying in the market is dumped, like it was here, for instance, this market will accelerate lower. Seriously, there's a lot of volume in here. If that gets dumped, it'll overwhelm the buyers and push down really badly. On the other hand, if this buying continues to find support and price attempts to break out, this is a lot of strength in the background now, and this will support any push higher. I wouldn't be trading this at the moment. I'd be waiting for the break, and which way it goes, I would go with that side. It's on a bit of a knife's edge at the moment, and there's mixed signals coming out of the market. It looks stronger than weaker from my eye. It's on a knife's edge. And just quickly back to the US dollar index, where we always finish. This is the really interesting market. Here's the old breakout line. You can see the market's come back, challenged the sellers, tested at this level, found support, pushed higher, drawn out further supply at the previous high, and the market's making a decent attempt by the looks to absorb that supply. Look for an early test next week, and if supply is low, a push higher. And if the early test next week does draw out supply, I'd be looking for a secondary testing bar that'll look something like that. Okay, that's my lot. Hopefully that was worth your while. Thanks for your time. See ya.